if the entire trading industry gets disrupted because of artificial intelligence, machine learning practice, if people start believing more in bitcoins and alternate currencies, then Zerodha might be in for a disruption, not because of Zerodha's fault, but because of the fact that the nature of the industry might itself change entirely. Zerodha has a fascinating name. Zero means zero, and Rodha or Rodh in Sanskrit essentially means obstacles. So Zerodha as a company has been obstacle free in reaching that $1 billion valuation without taking one single dollar in funding. So on this video, I'm going to cover 4 specific things about Zerodha which would help you understand more about Zerodha's business model and would help you gain a better perspective on how businesses should be built. First and foremost, I'll help you understand the concept of blue ocean strategy and how companies like Zerodha and Cirque du Soleil have used the concept of blue ocean strategy to become massive companies in their space. Second, I'm going to talk about rise of Zerodha, as to what were the factors that contributed to becoming Zerodha a unicorn in such a short span of time, and what were some of the key advantages and attributes that Zerodha incorporated in its business model. Third and finally, I am going to cover whether Zerodha can actually fall from the epitome of success that it is currently witnessing. So let's get this case study started. Now, in order to understand that why Zerodha became such a big company, it is important to understand the basics of blue ocean strategy and how it pans out in the business world. For this, I'll tell you a fascinating story about a circus called as Cirque du Soleil. Now, this is a Europe-based circus and it has had a fascinating journey so far. You might ask me that, hey Akshat, what is the similarity between a circus and a zero brokerage firm? Well, it turns out that there are a lot of similarities. So let me explain the fascinating case of Cirque du Soleil and let me take you to the world of circus. In the past, there have been giant circuses like Ringling Brothers and Barnum and Bailey. Now, these have been more than 100-year-old organizations and they have continued existing in the space like a dinosaur waiting to be disrupted. They use the same philosophy, like using live animals for the show, clowns for the show, and a bunch of different features that we are all aware with that we primarily associate with any circus. Now, as you might know, that circus these days is not a very popular thing, right? Kids are playing video games, they are watching YouTube videos, they are rarely interested in going to a circus. Then enters Cirque du Soleil. It really disrupted the circus industry. Now, why do I say that it disrupted the circus industry? The reason is very, very simple. In terms of revenues, Cirque du Soleil achieved in 20 years what it took Ringling Brothers more than 100 years to achieve. Now, this is a massive finding. If you ask me that, hey, what was the business secret here? According to me, there were 3 specific reasons why Cirque du Soleil was able to become what it became today. First reason, Cirque du Soleil had no wild animals in their show. It reduced the cost massively and there was also less logistical challenges in managing the circus if there were no live animals present. They also did not have to spend any money in terms of training, hiring trainers, etc. So that was a massive cost-cutting initiative from Cirque du Soleil. The second reason why Cirque du Soleil grew so much was because it was not even looking to compete with established circuses. It projected itself as a theater rather than projecting itself as a mere circus. It had great lighting, great shows, great sound, great choreography, and it projected itself as a big theater show. So the point being that it was not even trying to compete head-on with established players in the industry. And this proved to be an important recipe for their success. And finally, Cirque du Soleil found an entirely new customer base. Instead of appealing and catering their shows to children, they were competing to get attention of adults. So majority of their customer base is actually adults now who go to this circus to watch well-crafted shows. Now here is a very important recipe for success for Cirque du Soleil, that it adopted something called as blue ocean. Blue ocean literally means we are in a space where you're not competing with anyone. You are in a league of your own. A red ocean on the other hand would be what is going between Zomato and Swiggy. That both are cutting down and giving more and more discounts. Both are trying to win similar customer base. Both are offering the same tech play in terms of their platform. Zomato is using Zomato Pro and Swiggy is using Swiggy Super. So hardly there is any difference in terms of the operating model of these two giants. So if you look at the operating model of Cirque du Soleil, it figured out an entirely new ocean and a new market for itself where it was not competing for the same set of customers. It did not have the same operating model. Its value positioning was very, very different. Zerodha too is a fascinating case of blue ocean strategy, But the proudest part is that it comes from India. So this brings us to part 2 of the video, where I'll explain 3 key things that you can pick from Zerodha's model and ascertain how it has become a multi-billion-dollar unicorn and is literally defining the fintech space in India. So building from the last section, that Zerodha is a classic case of a blue ocean strategy. So the first key lesson that you can draw from Zerodha's story is that Zerodha is not trying to compete with traditional brokerage firms. So essentially what happens is that you as an investor, when you are trying to put your money in the stock market, you have to use a brokerage platform. That is mandatory. You need to have a demat account with a broker, and from that account you can sell and buy stocks. Now for every selling and buying, you need to pay a commission to your broker. This is how traditional brokerage houses like Motilal Oswal Financial Services still operate. That they charge a big brokerage when you as an investor want to maintain a demat account with them and whenever you transact. Zerodha flipped this game entirely. They were not trying to compete with traditional brokerage houses like Motilal Oswal Financial Services. What they said is that, hey, that we are trying to do away with the entire brokerage. All equity delivery on Zerodha costs 0 rupees. There is no brokerage charged on Zerodha at all for equity delivery. For intraday and FNO trade, there is a little bit of brokerage that is charged. Now I will put a chart here that will help you see the commissions that are charged by Motilal Oswal Financial Services and Zerodha, and you can juxtapose it yourself. For example, if we take a look at Motilal Oswal's default plan, they charge an equity delivery brokerage fee of 0.5%. If you compare this with Zerodha, the equity delivery is free, right? So there are absolutely 0 charges there. If you take a look at intraday and FNO series, you will again find that Zerodha is much more inexpensive compared to traditional brokerage houses like Motilal Oswal Financial Services. So the key point that I would want you to take away is that Zerodha was not ever trying to compete with a traditional brokerage house. It removed the major barrier for majority of the investors that, hey, come and trade with us and we will not charge you any brokerage. And that is how their marketing plan was built. Now this gets us to the question that how is it that Zerodha is able to keep the prices so low? The reason is very simple, that Zerodha does not spend any money on advertising. Instead, it relies on word of mouth advertising. Now this is very powerful in almost any industry, but this is especially powerful when it comes to finance, money, banking. For example, when I decided to get started on Zerodha, I asked my friend that, hey, which brokerage are you using? Because before that, I used to go with a traditional broker and used to pay a lot of commissions. So he told me that, hey, this is a new platform, Zerodha, why don't you try it out? So I also tried it out. I liked it and I opened my account and I started trading on it. So the bottom line is that that is how I figured out about Zerodha, and many of you might figure out from my video that, hey, Zerodha is a good platform, let me at least go and try it out. Now this is not a sponsored video, I am genuinely sharing my product review with you about Zerodha. I enjoy it, therefore I am recommending it to you. On this channel, I will never recommend a product that I have personally not used. This brings us to part 2 of Zerodha's story, that how it ended up targeting an entirely new customer base. What you need to understand is that there are a lot of people sitting on the fringe who are not completely sure that, hey, should I enter the stock market or not, whether I'll have the requisite skill set or not, will I be able to make successful trades or not. So there are a lot of people sitting on the fence for whom entering into stock market is a very difficult step. Now Zerodha, through its multi-ecosystem measure, is able to cure that problem. For example, you might have heard that Zerodha has something called as Zerodha Varsity, through which you can read a lot about finance and build your basic concepts. That gives the courage to a retail new investor that, hey, now I have a little bit of finance knowledge, let me just try their platform too. So building this ecosystem for Zerodha has been fascinating, and it has been able to capture a lot of new customers. So essentially, when traditional brokerage houses like Motilal Oswal, they were trying to go after established customers who have been trading in the stock market for years, Zerodha actually went after new retail customers who were sitting on the fringes. They offered them a lot of convenience. For example, accessing finance knowledge via their Varsity platform, making the opening of the demat account very, very simple. You can literally open up Zerodha's account by going to their website and getting it activated in literally 2 to 3 days max. And this process can be done completely online. The third and final aspect of Zerodha's business model, in my opinion, is the strong tech play. So essentially, in my opinion, Zerodha is more of a tech company rather than a finance company, in the sense that its platform is so beautifully designed and easy to use that new retail customers whom they are targeting, they are able to execute the trades very easily. They are able to analyze their portfolio and keep a track of what is happening in their demat account. Now, this convenience was not there with traditional brokers. For example, if you had a demat account at Motilal Oswal and then you had demat account 2 at some other company, then you had to aggregate all that. So because of the tech play that Zerodha has, be it in terms of leveraging tech to open your demat account, from maintaining your demat account, from getting the P&L statements, etc., etc., there are so many tech features embedded in the Zerodha's platform. It becomes very seamless for users to use that play. Additionally, it's always given that whenever people are investing in stock markets, they would also at the same time explore the mutual fund space. So Zerodha ended up creating a platform called as Coin by Zerodha. So this entire ecosystem play and the convenience to use tech to open up your demat and maintain your demat and explore these different options via mutual fund, small case, etc. It made the user experience really, really fruitful. Now, all these conveniences lead to something called as low attrition rate in terms of your customers. So customers who actually join you or who actually end up signing up for Zerodha services, they have a very low iteration rate from that perspective. Once they start using Zerodha, it is very unlikely that they will move to some other platform because of all these conveniences, the ecosystem and the tech play that has been incorporated. So in summary, Zerodha ended up building a business model that was completely blue ocean. It was not trying to compete with traditional established brokerage houses. It was trying to win new customers in the market, and it offered technological conveniences that were nowhere offered before Zerodha came into existence. And that precisely is the reason why I feel that Zerodha in India is the number one company which can represent India in the blue ocean strategy space. Now let me move on to part 3 of the video now, where I'll explain what are some of the potential threats for Zerodha and how is Zerodha actually trying to balance these threats. The first threat for Zerodha might come online. For example, there are several players, for example Paytm. They too have entered into brokerage trading space. Now a lot of us use Paytm, so it might be a convenient way for us to just literally use one app for all solutions. This is also the weakness of Paytm in my opinion. Since Zerodha is a very highly focused app, there is a lot more customer awareness around it, that if someone wants to start trading or investing in stock markets, then they would go to Zerodha because it has a very clear answer. So the market positioning is very clear for Zerodha, but on the flip side, an argument can be made that, hey, Paytm, it's a very big player and it offers conveniences. Everyone has Paytm on their phone. So if it decides to ramp up its brokerage services, Zerodha might be in for a competition. The second challenge looks more prominent to me, and this will come from the offline space. For example, majority of the banks for years have been trying to develop their brokerage services. Now Zerodha, despite its technological prowess, does not have that personal relationship, so to say. A customer, for example, I can't go to Zerodha's office and meet people or meet Zerodha's representative at the time of opening my account. Now, if banks can figure out a model and keep their costs low and integrate that into the banking services very effectively, then banks can come out as a market leader in the brokerage space. But since so far they have not been able to do it, I don't know what the exact resistances are. This might be a great topic for another case study. So do comment if you would want me to make specific type of case studies. I will definitely take it a look and give it a go. Now, third and final challenge that I think that Zerodha would face would be the evolvement of the technology itself. For example, if the entire trading industry gets disrupted because of artificial intelligence, machine learning practice, if people start believing more in bitcoins and alternate currencies, then Zerodha might be in for a disruption, not because of Zerodha's fault, but because of the fact that the nature of the industry might itself change entirely. So how is Zerodha trying to fight this change? So in my opinion, Zerodha has actually started capturing a lot about the finance space. It has started investing in small finance-oriented startups, and it is trying to build that finance knowledge and finance acumen in investors. So that is number one. Number two, Zerodha still adopts that niche play strategy. Niche play strategy means that, hey, if you go to Zerodha, Zerodha is a brokerage platform. If you go to something like Varsity, Varsity is a platform for financial education. Similarly, Zerodha can actually become a massive player in the entire fintech industry. It can actually become one of the leading voices in terms of how the financial education is created and delivered in a practical sense. It can literally become like an MBA school where people can come, study from Varsity and start executing those practical experiences via the Zerodha's platform. Zerodha is also investing in multitudes of different fintech players. So depending on what their business strategy is, they might end up creating these small blue oceans and start specializing in certain niches. So in conclusion, I feel that the way things are shaping up for Zerodha, that it has not raised any money from external audiences, it gives them the freedom to experiment, go acquire new companies, go build new businesses. The level of flexibility and freedom it has and the cash-rich business it has been able to build, it might become one of the leading voices, not just in India, but across the world. So I hope you enjoyed this case study. If you have any suggestions, please do give it. And please give it a thumbs up and a comment. Would really appreciate it. And thanks so much for acknowledging my work. I was just informed today by YouTube that I'm a creator on the rise. So thank you so much for showing all the love. It would not have been possible without your support. And I really mean it from the bottom of my heart. And a big thank you to all of you.